Good morning, guys, and welcome to today's edition of the London Session Open. Today is March 6, 2020, and it's 10:05 a.m. in London when we're doing this market update. Let's take a look at the markets as we usually do, and we can just begin with a general little overview here. So definitely things are moving. Stock markets are down quite a bit. 2% in German DAX, Dow Jones 2.24%. And pretty much most of the stock market indices I track are down. And you have the dollar index down a bit, GBP up, and Euro USD up, and Aussie dollar. And so yeah, it's a dollar, and there's some severe pressure here just looking at this. So we're going to talk about that. So let's begin with the euro. Look at that. So the idea yesterday was quite straightforward. And the same day, I mean, what we said yesterday, a few days actually, so it's not exactly yesterday, like 2 days ago, we said look to buy here. And then we said if it comes back down here, people are going to buy again. And they did buy. We went up to the first target. This could be a good level to book off or all. And now this market continued to push to the upside here. And it's really getting the dollar under some severe pressure here. So as we spoke about last time as well, because I reckon that as long as trade below 112.38, we could potentially go lower. So what you're looking for is you're looking for the short-term trend to align itself with the big picture trend. Well, it didn't. Actually, the short-term trend remained bullish, so that went well. But we took out this level here, and we're going now potentially towards the next high, which is 141.46. So that is what I'm watching. Now, if you're looking at this today and try to figure out if you should be buying and selling, then let's do that. So we're clearly in an uptrend, right? So the first thing we want to do in an uptrend is to figure out where is the trend of funding level. So where's the sort of most interesting low? And there's always different lows to work with, right? So you have this one here, which is the one I'm going to focus on. And then you have the very short term here, which is what more short term traders and scalpers would focus on. Now, even in the short term, you just had a breakout here. This market is a tiny bit overbought. It's not going to stop the market go a little bit higher, but from a risk-reward ratio perspective, even in the short term, it's not the ideal time to buy. The ideal time to buy was here, as we spoke about a few days ago, or here, or here. So this is the level or situation where you would look to book profits more than anything else. Okay, pressing the wrong button. There we go. That's my fib tool. I'll put it on top like that. So it effectively tells me you can probably see a decline down to 112.36. And it also tells me some other interesting stuff. And that is that I could probably lift the trend and funding level a tiny bit. Could potentially put it down here. Because according to all the fibs, we can bounce here, here, or here. In worst case here. But we shouldn't really retract everything. Let's as well take a look at this from a 4-hour chart. So if we take a look at this from a 4-hour chart, yes, it would make perfect sense. So it doesn't look, at least according to my system and my strategy, that we're going to get necessarily a trade today, but rather I think this can go up a little bit higher. But then maybe come Monday or so, when people start to book profits and so on, we could potentially go down, and then I would target something like 113.50. All right, this is the GBP versus the USD, and as you know, we got stopped out a few days ago here, I think it was yesterday, and now we're knocking at this little resistance level. So this is like intervals for me. It's like when you break this, you go to the next high, which would be this level here, and that could be something. But I would not be chasing this because the potential reward here is just 49 pip, and the closer you are to the highs, the more important does it become. In the case of the Euro USD, this high is here, and then you have the next high up here from June. So that's like 6 months later. So it's like 6 months difference between these two. And the wider the difference is, the less resistance there is. But here, you know, people that shorted, some people shorted here on February 14th, which is not so long time ago, and here as well in January. So I think we can definitely take this out potentially, but I wouldn't start to chase this. Rather, what I would prefer is to wait. So there's two scenarios I see here. One would be, as I said, you'll have this one, or you'll have that one in the short term. But I would prefer to let it go up, and then maybe Monday or Tuesday we take a look at it. It maybe we'll do something like that. we try to grab that dip whenever that happens, because right now this is your low, so that gives you this amount of risk versus, you know, potentially all the way up here, but as you know, it's not going to go in a straight line. All right, here's your dollar yen. Dollar yen as well is under severe pressure, and the market traded just below support here yesterday, and this was a bet on potentially looking to see stock markets go up higher, but we also warned and talked about the difficulties of trading the dollar yen and how many times it generated false moves. Now it cut straight through here, so there's not too much we can do about it. Effectively, part of trading, you lose half of the times you trade, if not maybe up to 55% of the time. Key point is that when you lose small. Now we're looking at this today, and you say it's definitely going lower. So you have that little junction here, or that little high, and then you have maybe this little high here that can act like a trend defining level, and then you have some support here. And I think if we do take this level out, well, this is actually quite interesting. There's actually a big descending triangle. Let's load the weekly chart. So this is your weekly chart, and I'm gonna load it like that. So this is your descending triangle, and you can actually even see more stuff here, but it's a big triangle as well to some extent, but we can treat this like a descending triangle, just like that. You guys have 1, 2, 3 lows at the same line, the horizontal levels. You take fib, or not fib, you just measure the difference here. If you look at the textbook, you should measure the base, but if you do that, you get some crazy targets, which could be met because we're in crazy times. But more often, you know, you have that little push, and then it goes a little bit up, and then it goes down, and then as many times you don't even go all the way down. So this would be a good target. In fact, I still think it's a bit exaggerated. More likely is that we go down to the 2016 low. So that is what I will be looking at. Now, if you're looking at this today, the market slid quite a lot over the last few days with no pause, no break. It doesn't mean that it can't break below here. In fact, it will probably trade below here, get a few people stopped out, and then it's probably going to bounce a bit. So I will give this a bit of a break. It could even bounce from here, right? So I'm gonna do like this. I'm gonna work with this, which is 108.07 as my trend funding level. Then we're gonna take fib from here to this level like that, and then if we do go up to maybe the first fib or so, one could start to consider to potentially turn bearish. Ideally, what would happen though is the following. This would be my preference, because this is, at the end of the day, it is an important support level. So if it does hold here, it might be spend a bit of time here and then it goes up. So my preference, my personal preference, what I would like to see here is actually seeing the market go up, as I spoke about, and then down, and then up, and then down. So then I have a little rectangle to work with here. And then when that sells off, we can go down. So I would love for this market to trade sideways here for the next 3-4 days, and then after that you get yourself some piece of news that either pushes it down, but it could also be a piece of news that pushes it higher, because what I'm going to do over the next few days is that the trend funding level is here now, but surely we'll have a lower high at one point, and then it goes down, and then it goes down, and then it goes down, and then we have that sort of breakout, and that could be a better way of dealing with the risk reward ratio. Let's take a look now at gold prices. Now gold prices are doing really well as well. This market definitely moved to the upside. Of course, I have unfortunately not been able to get a good take on this for some time, so I'm not 100% in tune with this market. Now let's do like this. We're gonna clear all of that off, and then we're looking at the 1 hour, and then we'll try to say, okay, what's the level that is the most interesting, the most recent one? Well, it's probably this one here. That could be my trend funding level. So from a short-term perspective, I'll take my fib like that, and then if we go down to these levels like here, then it could potentially be the time to look to get involved. Now something a bit different is happening today though, and if you're scalping, you know what you're doing. I'm sharing this, guys, with you. If you guys don't know how to scalp, you don't know how to trade short term, I'm not very good at it. It's not that I'm not very good at it, is that it's too intense for me. I used to trade very short term before, but I'm becoming an old trader, and I don't have time for stuff like that. I'd rather take my bets, hold the positions for a few days, see how things work out, because I just want to win. I don't want to be always in the market. But you guys that are short-term traders, you know what's happening, right? We're so close to that high, and I think it went already a little bit higher, and I do think it might actually spike a little bit. In fact, what we're gonna do, we're gonna add an old friend of mine, which is the pivot point indicator, which is something I used a lot. I think it was 2001, 2012, no, 2011 and 2012. Let's see if I can put it here. What we do? I'm a bit blind today. There we go. Just gonna make this the daily one like that. All right, so these are my pivot points for the day. So the pivot points tell you that the R2, 80% of the time, we're gonna remain within R2 and S2. I'm just gonna clean this up because we're way too many levels. So I reckon we'll probably take that out, probably go a little bit higher. And again, if you know what you're doing, you're scalping, then you're probably focusing on that low as your trend finding level. If you're more like me, you want to wait for slightly longer term ideas, then you're looking for that little pullback. But it's definitely bullish, and it does look like it wants to take out those highs. All right, crude oil. So this one is going really good. This has been something that I've been relatively well in tune with. So the idea was quite straightforward. Sell here at 48.27. So we're just at support now, and you get that massive 2018th low over here. And we're gonna look at stocks in a minute. I think I'm gonna look at stocks. So if we're not taking out certain levels in stocks, we could potentially see a little bit of a bounce. But I think the 2018th low is key, and then you got the bearish pattern target, which is talked about on the break to 49.42, which is down here. But we'll probably reach that maybe in a month or two. If you did sell up here, then it's time to book probably half of the position as a minimum, and we're tightening this up at least. So we're gonna put it here, and we're just gonna leave that here to remind ourselves of what we've done in the past, and then we're gonna create a new levels, because that's not the new trend funding level. We don't have to have fib on this one. You can just see low and a low. So from that level, wrong button. From that point, and that point is 46.32. From that point, I will probably turn bearish and sell a bit more again. So this is a good spot to book at least 50%. Let's take a look at stocks now. If stocks are very close to support, then you probably want to book more here. So let's take a look at it. So this is the German DAX. German DAX is cutting straight through support and is very close to take out our August 16th low. If we do take out the August 16th low, we'll trade down to 11,262 and then maybe even lower. But we're actually quite close to these levels. And let's just take a look at the max drawdown. So this is the max drawdown. It just shows you the percentage decline from the high to the low. So we're down with 16.6%, and according to, at least historically here, from a bigger picture perspective, this market can decline with up to 24%. At that point, it starts to become too oversold here. And you need to look at it like this. These are some great companies that are in the German DAX 30. Not all of them, but some companies have been there for years, and they will be around soon as this whole Corona thing blows over. Maybe 1 year's time or so. So we need to remember that's what some people think. Like old money, not old money, but more longer term, more conservative traders, pensions, they're looking at these companies and they say, this is a good company. It has good multiples, because good cash flow, has low debt. It's a good buy, and they will buy it, and they get some dividend. And that is what we need to remember. So these people are probably really excited about the current situation in the market. For us, though, they're trading short term is a bit of a different story. So we are just above that level, and if we do trade below the August low, I will be forced to abandon my bullish view, and then this becomes my trend finding level. I'm gonna leave it the way it is right now. We're too close to the low here, so there's no point in doing anything. And I'm just gonna leave it the way it is. And hopefully it works out fine. I mean, everything is, it's not, I mean, everything is a little bit, I thought we were gonna have more of a bounce. So I can just tell you what I did. So earlier in the week, I bought here, then I moved up and I made some good little money here. And then I actually messed around here on the on the great cut, lost a little bit of money on that. And yesterday in the Russell 2000 is small cap stocks in the US. And the Russell 2000, I actually bought a bit here, and I didn't really like the way it progressed. It went upwards and then it started to go lower, so I closed that out. So the fine tuning, sometimes you get that with just experience. If you're totally new to it, don't worry. The more time you spend on the charts, the more fine tuned your senses are gonna be. But yeah. So there's not too much we can do about the German DAX if it would go lower. All right, so let's take a look at the S&P 500. So this is the S&P. So the S&P here, I had two different views, okay? So I thought the German DAX was going to go up from a technical point of view. And here as well, I said it will probably go up, and it did go up. But then as well, I said probably from a purely short-term technical perspective, this is the level you want to be selling. And this was pretty much a 50% correction. So we started out bearish below this level. The market went up, and then it came down. And then when I saw this was well and clear defined level, I pushed it down to the high, and then things swung up back again now, and it even took out support now. So it's going down. So the question is here, what's going to happen next? Probably has to do with the coronavirus, of course. So this is now under a bit of pressure. I think it can go down a little bit more, but when the US markets are going to open in about 3 hours time, I think it's probably a good time to book profits on this thing. Can even peel off a little bit now, but I think again, okay, maybe we're down a little bit more for the next hour. But down here, this is support. So I would be looking to book profits here. Now, what's going to happen next then? I think it depends, as I talked about before, what happened with the coronavirus crisis. Let's see if I can load that today. So I think it's quite straightforward. The governments in Europe are pursuing a different strategy where they know they're not closing any borders. So they will allow people to get sick, and then they will deal with it. So they're gonna deal with it at that point. And it's gonna be difficult. I read something on the BBC. I think it was some UK-based professor that said that a majority of everyone, I think he said 80% of everyone is gonna get sick within a period of, I think he said 6 weeks, and 95 of everyone within a period of 9 weeks. So we're gonna have some very sick people here. And I think the way they're looking at it is that let it go through the system, and then we deal with the deaths. And they're prioritizing people going to the office and working over the life of people. And they're doing that because of the economy. What would be the consequences if they shut down as they did in China? And I reckon that it will work for a little bit, but you have Italy now. You got 148 people dead. And last week, we had only 250 people with the disease. And remember, it takes about 10 days to actually die from this. That's sort of the period. Anyway, long story short, I think it's gonna get more chaotic, and then last minute, when everybody already has it, they're gonna say, let's close the borders. And what has happened is you're gonna have all people sick, then they're closing the borders. That's when they're gonna feel like everybody's gonna get extra screen and so on. People need to stay home. Whereas it would be better just to tell everybody right now in Europe, guys, it's work from home the next 2 months. If you have to go to, if you work at a factory or something like that, you do that. But anybody that can work from home works from home, and you do something a bit different. But they're not doing that. So I think things are going to go a bit more crazier. And remember what I said as well. I said in the beginning of the week that France and Germany were at the same levels where Italy was last week, which is about 250 people. Now you can see where Italy is today, and this number is going to be updated probably around 6 p.m. London time. So I think it's very likely that France and Germany, with Germany being the biggest economy, all gonna get hit. And as well in the UK, we're just behind France and Germany with maybe 5-6 days. But then effectively we're gonna have a situation like Italy. And again, let's take a look at it. We do it every day. Let's continue to do it. Live cam Milan. Okay, not such a beautiful weather today. Oh, they have a bit of sun. Yes, you still see people out and doing their things. Compare this with the situation in the images we saw from Wuhan and the Hubei province, where nobody was going out because they're not allowed going out. In some places, they even locked people in. And what they managed to do in China is that they stopped their growth, and then people are recovering in China. But we're not doing this in Europe, at least not right now. But as soon as this creeps up, it will happen. So you say, how does this have to do with the market? Effectively means that you could have another leg in the German DAX. That you could, because what I was hoping for, I was anticipating this. I was anticipating the fact that we could get that leg to the upside, and then here next week people start to say, hold on, we need to do something about the borders, and then the market would have come down. But it looks now we just went up a little bit, and we could potentially be trading down here. Maybe we may go all the way down here, and then at that point I think the market will be a bit too pessimistic. As for drawdowns, as I said before, in the German DAX you can have a slide down to by 28%. So fib from the percentage went from 20% was 20%. There we go. 20% is around here, like that. If we go all the way down here, that will be a slide of 37%. Okay, let's see if we can answer some questions. And by the way, guys, if you're wondering why are people buying euros, I think it has to do with the fact, as I said before, that it's a funding currency. It's a funding currency where people have been borrowing in euros, and now when things are not going that good and the volatility in the investments are higher than or getting higher than the yield interest rate differential, people are hedging their bets. And in the case of Australia, New Zealand, you're having those markets up as well, and I think that was a technical rebound, and people effectively pricing in the bad news over there. Okay, let's see if you guys have any questions. There's a lot of people here, and I love it. There's like, I think there's 17 people you watching right now, and I really like that. Don't forget to hit that button to like it as well. Don't forget to follow me on Twitter. That way you get a notification when I go live. There you go, that's my profile. Oh, that's the wrong button. There we go. And as well, I have a WhatsApp feed where I send out this video. That WhatsApp feed is my personal, exactly like my Twitter. So you know. And if you want to be added to that, you just need to click on that thing here. Okay, known from payrolls. You're very, very good. Known from payrolls day today. How can I forget that? So we have Hugo. Good morning. Good morning to you. Haven't seen you for a while. Thanks so much for joining me this morning. And says the case was discovered at my daughter's school in Marseille. School is open so far. 7 people died already in France. So a case was discovered in Marseille. Okay. Oh wow. So are you having your daughter still going to school, or are you having her at home? It's a bit tricky. I have a little boy myself, and right now the nursery is open, but I think in 2 weeks they're probably gonna close that out. So he will be home. And as far as I understand it, obviously you don't want to have a little boy or little girl sick, because they're difficult when they're sick, difficult when they're not sick either. But it looks like at least they're coping very, very well with the disease. I think what's more important is, helping and taking care of, our older parents, grandparents, maybe even some older neighbor or so that might need some help. So we got Maurizio. Good morning to you, sir. I hope you're doing well. Okay. Thank you so much, Hugo. What's my point of view on silver? Okay, let's take a look at silver. XAG USD. Okay, so this is silver, and silver sort of struggles a bit to trade higher. This is your daily chart, and you have a bit of a range, if anything. So you can treat it like that. You can treat this like a rectangle, and if you take fib from the very low to the very high, you get that difference, which is 2.28, and that gives you the target on a bullish breakout, and target on a bearish breakdown would be something like this. So that is the range you're looking at. Can this go down? Yeah, I think it can go down. There's somebody selling a lot of gold and silver, and I think as well people look at silver and they say, oh, maybe it's more of an industrial metal. I don't know exactly what the use is percentage wise, but that could be also a reason here why it's not going upwards. If you think, and it wouldn't surprise me though it goes upwards, so you could potentially be doing something like this, but you would be better buying gold, I think, than buying this. That's my opinion. What you do is, of course, it's up to you. So this says the euro is unstoppable. I don't see how this can move down again. Same with gold. Yeah, I mean, there's situations where things are just now. There's panic. I remember like things like the Aussie dollar, like many years ago, and during the financial crisis and stuff, where I remember the euro actually from what was it, 140, it went down to 101 under the euro crisis. I don't know if you remember this. If you were looking at the market just went straight down. And yeah, what can I tell you guys? Don't try to fight it, at least not right now. I had an idea to fight it here, but clearly you're not seeing that right now. So I wouldn't go against the trend. So I got a question about dollar CAD and the non-farm payrolls. So we're gonna take a look at the dollar CAD. Okay, so this is the dollar CAD, and as you might remember a few days ago, we said people are probably gonna be buying here, and you have Canadian and US non-farm payrolls coming out today, and if you are having a bit of profit, you can probably close out some and probably put tighten stop losses up to 129, 132.91. In fact, it's probably better just to take the profit, I think. In regards to the non-farm payrolls, it's important, but ignore it. That's what I can tell you. Macro fundamental news has an impact on markets, and of course, euro dollar is a little bit overbought in the short term. So if you have a stellar outcome of the non-farm payrolls, you'll have the dollar gaining a bit. But I wouldn't just buy because something happens. To give you an idea, here the Federal Reserve cut interest rates with 50 basis points, and at least initially it looked like a solid thing to do to buy the Dow, to buy here like that. Had a break to the upside, but then at the end of the day, it wasn't enough because people did not want to buy here because the market had risen quite a lot. They wanted to buy at lower levels before pushing it upwards. So forget about the NFPs. You stick to your technicals. If you have a bit of a profit, again, as I said before, if you did buy down here, it's a good little time to book profits because if something happens, you might be up a lot or you might give everything back. So wait for the NFPs to pass. If the market goes down, we could buy. If not, we just wait. So don't get sucked into trading the non-farm payrolls, and don't get sucked into try to figure out if you should be long or short here in the short term. That's what I would suggest. Okay, we're gonna wrap things up, guys. It's a little bit late here, and this is a free thing we do. We have more premium stuff as well. You know how to contact me for that. So we're gonna wrap things up here. I do hope you liked it though, and do take care of you guys over there. Don't get too much panic. Don't listen to me too much. My wife tells me I'm paranoid, and I am probably a little bit paranoid. To give you an idea, I bought my masks in January already. Okay, that's when I bought my masks, and so I'm a bit ahead of the curve, which you need to be as a financial analyst. But most of us are gonna be perfectly fine. It's just anybody older than 60 should probably just stay at home, get food delivered to the door, get yourself some Netflix or something, or some really, really good books, and then you meet them by summertime when this is over. Okay, guys, have a beautiful day, and I'll see you guys on Monday. Thank you very much.